Hey folks, it's Simon here with your Tower Daily video for Friday the 3rd of May 2024. And today, guess what today is? Today is Jobs Day. All right, this is the day when the BLS tell us the employment situation with the non-farm payrolls report. Now, we should all be ashamed of ourselves for paying as much attention to this number as we do. It is a number that is subject to arcane adjustments and often significant subsequent revisions. But the market loves to focus on it, and so focus on it we must, particularly after Wednesday's FOMC press conference. So Powell made it very clear that employment is very much a focus of their dual mandate, and that any unexpected rises in unemployment will accelerate the path to rate cuts. Now, the street is looking for 243,000 new jobs, unemployment rate of 3%. If this number comes in much cooler than expected, let's say 200,000, or if the unemployment rate pops up to 4%, we could start to see market pricing in a rate cut for July. And stocks would probably love that because, if we start to see this number come in weaker, maybe we start to price in 2 rate cuts for the year instead of the one that is currently priced. Of course, the converse is also true. If this number comes in much hotter, if it's significantly above 240,000, I think markets will sell off because that will roll back expectations for rate cuts as far as the market is concerned, particularly in light of sticky inflation numbers. And now we're seeing the ECI, the Employment Cost Index, start to push higher as well. And if the labour markets remain very, very tight, it puts the threat of a wage price spiral back on the radar, which is the last thing the Fed needs when inflation is already looking sticky. Now, the way markets traded on Thursday, we saw the S&P up nearly 1%. We saw the Nasdaq up about 1.3%. It's almost as if the market knows, Powell knows the number's going to be soft. I know that sounds a bit conspiratorial, but it is what it is. Certainly, if the number comes in soft, I expect we'll see a risk-on event. Yeah, that's right, folks. We are back in a bad news is good news paradigm as far as the stock market is concerned. Bear in mind, though, I know it always feels bullish when the market rallies 1%, but just looking at it on the chart, it didn't change anything. All right, Thursday was an inside day. The full range was within Wednesday's range. The same is true for the Qs. It's an inside day. It doesn't change the picture at all. I think there's still every reason to be a little cautious of the market here, although that could change if we get a very soft non-farm payrolls number today. Well, that's what I got for you. I hope you have a great weekend.